And welcome into Market Talk for this Thursday, December 2nd. Great to have you with us once again. Thanks for making us part of your day. I'm your host, Jesse Allen. Find us online, markettalkag.com. That's where our home on the web is. You can find all of our streaming sources there, our social media links, news of agriculture, and much more. It's all online, markettalkag.com. Well, we come in here on this Thursday, second day of the month of December. We're nearing the end of the calendar year. We've had a lot of worries in the market, but today was a generally positive day across the ag sector, across grains and livestock. Let's talk about it. Let's bring in our good friend Bryan Doherty with Total Farm Marketing joining us here today. Bryan, good afternoon to you, sir, and haven't talked here a little bit with the holidays, but hope all is well. Thanks for being on.
Hey, my pleasure. Yeah, risk on day, it looked like in the marketplace. A pretty shaky start to the week coming off the holiday and major league concerns about the Omicron variant of the COVID. Those seem to be all of a sudden not quite as concerning. So I think it was Monday, maybe Friday, Monday, the CEO of Moderna had talked about maybe the vaccine not even being able to handle this variant. Um, the word on the street since is it's apparently not quite as bad in its what's the word I'm looking for? In its symptoms,
Mhm.
and maybe it runs through society pretty quick because it's very contagious. I don't know, but
Mhm.
anyway, the stock market's up nearly 700 points as we talk. I got beans 15 higher today. I got corn gaining back 5 to 7 cents. Wheat was the big winner, anywhere 15 to 28 in Chicago. Back to risk on and snug supplies and looking at southern hemisphere weather and La Nina patterns and lack of farmer selling.
Well, you mentioned the Omicron variant, and it felt like that was the big news item that really influenced the markets. But there's a couple other underlying things as well. You mentioned a few of them. I think another thing to think about is the general end of the month liquidation we saw in November. Those last couple of days maybe playing in, and then getting some new money back in here to start the new month, especially with the dip. Maybe buying the dips a little bit here in some of these markets and you mentioned wheat as well, the leader today, and I know we got the Russia-Ukraine worries out there as well, really influencing the wheat markets on top of everything else. What are your thoughts with how wheat was today? Because that seemed to kind of retake the lead, and it's been a leader here the last couple of months, Bryan.
It has, and by all accounts, was probably overvalued. A week ago, it was. We follow something called stochastics, a technical signal or indicator, and it was in what we was termed the overbought territory.
Hmm.
And then you had some signal in that territory with a what they call crossover. So that sent a technical signal. The market has made a correction, moved down to the 40-day moving average on the July Chicago. I'm looking at new crop right now just for reference point. And so now we're bouncing. So we're bouncing into this correction. Now that being said, the wheat markets posted a very nasty negative looking bearish key reversal when they peaked on the 24th. So that signal is big enough at the top of a big range, a long-term uptrend, that we want to be very respectful of that, and that the likelihood that wheat prices, take that high out are not good unless there is something else, Jesse, that really comes along to hammer it. Now that would be mainly weather or maybe political unrest or something. Um, but I think we might have seen the high for wheat. I don't want to be that bold, but it's sure when you see a run like that, an acceleration toward the top and a bearish key reversal, you'll get a correction back upward, but the high may be in.
Well, that's a good thing to consider for our wheat growers, and we've had a lot of good strength in this wheat market for a while, and looking as well and how that parlays into the other grains, corn, soybeans. I think with corn, maybe a little more relation between corn and wheat. You mentioned 5 to 7 higher today. Corn doing its best to kind of keep up with soybeans today, but still looking at good prices on the board. 575, 580 is kind of the range right now. I mean, good prices there. I know basis is still strong as well on the corn side, Bryan.
Basis is still strong. Farmer selling remains light to almost non-existent on the setbacks. We've talked about this a dozen times before. Farmers are in a pretty good place this year. Just put grain in the bin, they're not going to take it out and sell it something cheaper. They're going to hold on, especially on dips. They'll take that risk. That's why they put it in the bin. They want to take that risk. Um, you've got a snug supply. All attention focuses on the southern hemisphere because that's where you can get your supply shock or something that really changes the perception of supply in a very short period of time. Winter's, you know, coming down toward us. It's been warm in a lot of areas, but winter will get here. We're going to have sloppy conditions and probably increased feed usage in feedlots, those type of things. That's all ahead of us. So the corn market, for lack of better words, is consolidating. It's been very volatile lately, but it's consolidating the last 60 days or about 60 days. And you can go back to mm, well, I should say probably the last 40 days, mid to late October, we're trading at the same price levels. So that's really a big victory after a run up after it bottomed in September, rallied up, came back down, got a negative report in October, and rallied again. So it's been taking negative news and rallying. I think it's a lack of farmer selling. Outside markets, energies have been on the defensive. You're talking crude oil, looking like it's trying to gain some ground today, maybe having posted a near-term low, but $15 off its high. Ethanol has been solid, but we need to see the energy markets rebound to keep those margins in ethanol. When you drop crude oil, like I said, $15 in really just a very short window of time, that gets a lot of attention.
Well, it does definitely get a lot of attention, and along with crude oil and this corn market as well. Looking through Twitter, just seeing here not too long ago, there's reports, sources saying we could get biofuel blending proposals in the coming days. Now, I know that's another thing hanging over this corn market is this ethanol story and what could happen with some of those blending requirements. But I think that's another thing to watch as well here in the short term, Brian, if we do get some of these proposals in.
Yeah, and this could go either way, and it's kind of interesting. You've got an administration that kind of ran on the platform of, all energy change, all bio, all this, all that. They really, if you kind of look at the activity, they've actually kind of favored after after the first couple of weeks, really kind of favoring the sort of the energy complex, as in big oil. You're seeing where, well, the last thing was, releasing some of the reserves, maybe only about 3 days worth or 2% or 1.5% or whatever it was. But again, it's a signal that they'll combat higher prices. Talk that the administration is encouraging foreign countries to pump more oil, keep supply availability. But that all kind of bleeds into what does this look like for the whole bioenergy complex? We've seen soybean oil really come under some heavy pressure lately,
Mhm.
and yet when you look at the big picture, you can't help but be a fan of more crushing plants, or there will be more crushing plants, just a fan of more demand for soybeans domestically and worldwide from a bioenergy and from a protein perspective. That's going to take time in the very short term. And I say short term, next 60 days, attentional focus on the crop development in the southern hemisphere and what that looks like. Right now, I'd say it's in good shape. Ask ask me in 2 weeks if some of these drier forecasts hold I was gonna say hold water, excuse the pun, but if these drier forecasts have merit, you're going to start to see some net drying that is going to start to concern the market about supply. And you've got a really nice inverted head and shoulders formation beginning to form on bean charts. If we break resistance, now you've got some upside to run. You could see $14 January or March beans if that were to hold true.
Definitely. And I think with this soybean market, a strong day today, it's seeing a lot of what you mentioned out there. And, moving forward, I'm with you. The South American crop looks good. But those weather forecasts, if they do hold dry, what will we end up with? I think some of these early beans that we're going to get by the end of the month, not too worried about that. But looking into later in January, February, March, beyond, it's going to be interesting to see what comes out of South America.
Well, it'll be a big supply, and they're cheaper than the U.S. beans right now.
Hmm.
So, look for the export market here in the U.S. to remain hand to mouth. That is importing countries. We did get some nice sale numbers today. The numbers escape me exactly, but What
Hmm.
if it's over 100,000 metric tons that's reported that day? So we saw one to China and then one to unknown destinations,
Yep.
which is likely China. So I think the combined was probably around 300,000 metric tons, or just a little bit under that. A nice signal to the market, though, that we're continuing to see the buying, and that's despite the market rallying up last week. We give it back this week. Now we're starting to come back, but we're hanging in that $12, 12.50 zone really well in this old crop. Looks to me like it could be on the verge of a breakout to the top side. I don't think that's wishful thinking. I think it's just reflective more of the market seeing some export activity, good crush numbers, and now uncertainty in South America when it starts to matter. I've always said you got to turn into that month of December, probably around the 15th, when the weather, all bets are off. It's all weather from that point onward.
Now, one thought on the export front on corn, back to corn real quick. Typically we see corn, our shipping windows really pick up in the first part of the year. Do you think we could see some increased farmer selling if our windows pick up there and the appetite is there for US corn, Brian?
Yeah, we will. Now let's kind of think about this. So when we get more into that first of the year window, January, February in particular, remember now we're already getting 2 to 4 months behind harvest, or that's harvest is behind us. So farmers that worked hard to harvest the crop, put it in the bin, prep their fields for fall, take some rest here in late November, Thanksgiving, and then look toward the holidays. Now they start thinking about selling, moving, coring bins, those type of things. Any rallies from this point onward, I think you're just going to see farmers kind of keep keep rewarding the market and picking it up. I don't think they're going to sell into the dip though, but I do think they'll sell into the rally. Now, we're going to flood the market. No, inputs are too high, inflationary concerns, fertilizer will keep farmers selling, but they're not going to open the bin doors, even though it's a pretty terrific price. They're not ready to do that.
Brian, let's flip over to livestock. And we saw solid export sales for the week on both cattle and hogs, beef and pork. China was a featured buyer in both beef and pork. What's your thoughts first on that hog front? What'd you see there today? It looked like a good, solid move about midday in hogs.
Yeah, really, really solid there. Kind of, waiting for something to happen here in that market for some time. A really good looking day gets us back to where we were 3 or 4 sessions ago after some weakness, following everything else down. The hog market we think's got its work cut out for it, but just because we don't think that China will continue to be the kind of buyer that they've been, so we'll see it ebb and flow. And they were in the market today, and when you compare pork to beef, they're obviously buying beef. That's a sought after product, and so we like that. So you've got the cattle market continue to stretch itself in a nice long term uptrend. Hog market, like the premium to the cash index. Cash index currently right now in that low 70, 70, 27. That might pick up some in here in the early December.
Mhm.
But the summer months is where I'm going to focus. You got $97. That's getting attractive. The contract high in the summer months came at the end of November at 98.15. So we're kind of knocking on the door there. So if you're a hog producer and you've got inventory that you know you're going to have out to that window, don't let those numbers escape. We've seen some high volatility in that marketplace, especially that June contract. Get up toward 100, or contract high back in June, in the 97s, and within a matter of weeks down to 88, rallied back, dropped it off again to 87, rallied, dropped off again to 88 and a half. Now we've rallied it again. Volatile. I don't think we're going to see a shortfall of inventory as we head out to that summer window.
And over on the cattle side, finally got Cash Country to get active this week here today. And again, those asking prices being met out there 140, 142 in the
Yep.
south, 220 in the north. It just seems like we can't be stopped out there in Cash Country in the last couple of weeks, Brian.
There's just good underlying pent up demand from consumers. It's been that way the last 18 months. I don't want to say consumers are reckless in their spending, but we've got, a tight job situation. We've got a scenario where um, we're seeing people spend money, and buying beef is featured into the holiday, featured into the Super Bowl, whatnot. we're seeing the money come into the cattle market, both from the speculative side, the export side, and from the retail side. And that's being driven by consumer demand. So, really like that. I think, too, the reality is we probably have a finite number of cattle. We talked about not only high grain prices, but also remember we talked about things before, like we had such dry conditions in cattle country. So, first was displacement. We probably think we cracked the herd back a little bit here. Um, Talked about in the past, the demographics and age of the cow calf producer. So I don't think you've got this plethora of cattle that are just waiting to be, you know, pushed into the marketplace. It's going to be pretty slim, nip and tuck from this point onward until we, see this live market move up enough to really entice herd expansion. And that I think that all goes back to that. Tell me reasons why we expect the herd to expand. None. Crickets.
Yeah, I would 100% agree with you on that. It'll be interesting to watch for sure. Brian, great stuff as always. Any final thoughts? Anything you want to reiterate for us here on this Thursday?
Yeah, well, the markets again show their volatility this week, and it gets, kind of that sick in the stomach feeling when all of a sudden, your commodities that you produce are all of a sudden on the downside. So don't be afraid to sell. Follow your instinct. Utilize the tools. If ever there was a time to really kind of pencil up and spend a few hours or weeks, really kind of to get to know your elevator manager, what tools they offer, people like myself who can guide you with the paper tools, the futures and options. But know your tools. Know you spend an exorbitant amount of time doing the best you can to be an awesome producer. Invest in your marketing skills and your alternatives, and that's not meaning you need to be an expert at everything, but really it's your management circle, the people you work with. Know who to contact, what questions to ask, or tell them what questions should I be asking. Where's my risk? I just think that communication and learning is so important, so big in this environment where things have changed. Just think of the last 18 months, the wild, wicked changes we've seen. It takes a lot to keep up with it.
Well, if someone needs a little advice and help and education on the tools they have, I know they can reach out to you and your team there at Total Farm Marketing. What's the best way to do that, Brian?
I'd first start with a phone number, 800-334-9779. Just give us a call. You can ask for a number of advisors. If you want to talk to me, ask for Bryan Doherty. We got two Bryans here. I got an email address, Bryan at totalfarmmarketing.com. Shoot me a question or a scenario. Otherwise, we got a nice website. So we got a lot of things. We got a lot of resources and educational materials. So don't hesitate to contact us. We're honored to work with people that need help.
Well, Brian, we appreciate the time as always, sir. Thanks so much. I know we'll be talking again real soon, and have a great week and weekend, sir.
My pleasure. Thank you, Jesse.
Brian Doherty with Total Farm Marketing, our guest today here on Market Talk. That's going to do it for the Thursday, December 2nd edition of the show. I'm Jesse Allen. Have a great afternoon.